We have the Hang Seng, which is seeing cuts of 1.1% right now.
The way down, just to start with the supports, yesterday's low of 21,543 is important.
The dollar index is a little bit stronger, but I think this is the stock to track today.
I think what markets are really digesting now is whether we are actually going to have a soft landing.
Nifty Bank on your screen, which is around about 400 points.
High-risk areas of the market, which is the micro cap, small cap, IPO.
Basically relates to aseptic processes and documentation.
The 12-month year-on-year full inflation was expected to come at 2.9. It's come at 3.1.
Inventory turnover, like we are able to turn from 6 to 7 times at present.
The benchmark indices are down about 0.5%. IT is under pressure.
A CPI number which has been more or less par for the cause.
Investigative agencies, including the Enforcement Directorate, have initiated the preliminary inquiry against Paytm Payments Bank.
Airline hasn't paid January salaries to several employees. There's an alarming delay in clearing statutory dues.
From the lows, the Nifty has seen a bit of a recovery.
Well, that is the last few hours of trade, and it's a fantastic recovery that we have on our hands from the day's lowest point. This is the last hour, closing bell, coming to you live from the CNBC-TV18 News studios, and I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, afternoon.
Hi, afternoon, folks. I guess not bad at all, and once again, it's banks which are trying to lead. I mean, second day running, we've got some kind of follow-through on the banking side of the market.
Well, that's right. You know, there's some positive news coming in on Vedanta in terms of directional. Supreme Court has given some kind of hope to Vedanta for its copper smelter in Tamil Nadu. They proposed a committee to explore possibility of restarting operations. Remember, it's been shut for many years. But just the comments that are coming in there are viewed a little bit positively. The Supreme Court has observed that the national interest can't be overlooked, and few copper smelters in the country, they say that the nation should not lose this particular asset. So the commentary that's coming there is positive. It doesn't add too much in terms of SOTP, but at least this is an asset that was shut, not giving anything at the EBITDA or at the operational level. So there is hope. I think that's why the stock has moved a little higher.
Pretty significant for this top court to weigh in.
Yes, yeah.
Like this. I mean, just yeah, absolutely. And I think
And this is the first time I've heard something like this. You know, they've been quite stringent on this, that it's not going to open out for the last many years.
I think this was the initial hiccup came from the Pollution Control Board, local Pollution Control Board. Then it kind of moved up to higher authorities.
Right.
But now
it's been shut, I think, for at least 5 years now.
At least, absolutely. But this is significant. I mean, we'll have to see how much of an impact this has in terms of earnings, etc. If this starts, and we'll have that up for you a little later. But definitely, I think strong comments coming in from the top court at this point in time. The market, by the way, is having a field day, right? I mean, from the day's low, it's a significant 200-point plus kind of recovery that we've seen from the day's lowest point. It's banks. I mean, and it's not just actually banks, it's SBI. Let me be clear. State Bank of India is up 5%, stocks almost at 750 bucks. You know, last Friday, we saw that decent kind of a move. It broke out basically after it's been consolidating for 15 months now, State Bank of India. You know, the smaller banks have all kind of caught up. SBI was the first to move after the COVID crisis when the markets began to go up, etc. SBI was the first to move and moved the banks, and then for the last 15 months did nothing while others caught up. And looks like it started another move higher over the last 3 or 4 trading sessions or so. So, I mean, I think that is something very clearly to keep an eye out on. Just a couple of more points. On the Nifty, while it is absolutely correct that it's a very decent, very respectable recovery, on a day-on-day basis, this is the 5th day that the Nifty basically has made a lower low. I mean, if you just look at the trend over the last 5 trading sessions, the resistance for the Nifty comes in at 21,747. We are right there. I mean, I think as we came in, we kind of took that up. We're about 10 points higher. So we'll see the close. And then there's the 21,891 level, which is the 76.4% Fibonacci retracement of the fall. There's a final kind of a hurdle in that sense. For the Nifty Bank, Tuesday was an inside day, which, yesterday's candle was almost inside of Monday's candle, and today's candle on the Nifty Bank, unless something changes, has largely been, I mean, because of SBI, Bank Nifty has also moved up, but it seems like an inside day once again for the Nifty Bank. Big jump in US yields. I think that's keeping a lot of people on the back foot. Our yields in the US, the 10-year going to 4.5%. Technically, I think the answer would be a yes. But then, I mean, there's going to be a fair bit of data. Later tonight, you'll hear from two Fed speakers. The Fed Vice Chair is on the dock. He'll be making a speech, and then we'll hear from one other gentleman on the Fed voting committee, the FOMC. And it'll be important to hear them out because they'll be reacting to the last bit of data which caused so much sort of action in the US, which is the CPI number. So the first of the Fed officials after the CPI, and I think that'll be important. If they say, well, you know, we're going to look through this and doesn't meaningfully change what we've already said, I think you're in for some fireworks in the US again later tonight. So important either which ways. Surabhi.
Yeah, Prashant, absolutely. On banks, I just want to say that, you know, there's SBI, which is up 5%, and then there is HDFC Bank that continues to struggle. HDFC Bank is glaringly absent in today's bank rally. So, you know, perhaps there's some more of this shift away from HDFC Bank into something like an SBI that's playing out. And that's the performance. It's recovered from the lowest levels in the last 20 minutes or so, but still down about 1% or so. On the mid-cap side, the screen is actually looking pretty good because you have a healthy advance decline ratio once again. It's almost 1,500 stocks advancing, less than 900 stocks declining. So that's looking good. And it's a very healthy mix of PSU and non-PSU gainers today, if you look at it. I mean, you've got PSU names like LIC doing really well. Some of the refiners, by the way, like BPCL, etc., they're continuing to get a fair amount of traction. HPCL, BPCL, even some of the smaller names like an MRPL, up about 6, 7, 8, 9%. So oil refiners is a very hot space this afternoon. Nalco, of course, Nigel's been telling us from the morning that the numbers are looking good. So that's the PSU lot. There's stocks like Ircon, RITES, and the railway sort of movers and shakers come in. So PSU is looking good, but even non-PSUs, look at Jyoti Laboratories, look at a Honasa, look at something like an IRB Infra on my screen. It's popping up 10% higher. So very interesting moves in mid-caps. And Nigel, it seems that some amount of confidence is coming back after that big shake-up midweek.
Just take a look at the markets. You know, as we speak, the Nifty is now up close to 50 points and the Nifty Bank is up close to around 500 points. I would like to pull up a chart of the Nifty Bank. Only the Nifty Bank we should pull up with the 20 and the 200 DMA. You know, the Nifty Bank had taken support at around the 200 DMA and it's been gradually moving up. What it's done with this big U-turn that we've seen of 1,000 points in a single trading session is that it's taken the 20 DMA with it, and also I think the 100 DMA, it's what it's knocked out, so that chart will tell you the picture. There you go. We just crossed, we took support at around the 200 DMA, and now they've breached the 20 DMA on the upside as well. So the Nifty Bank out of nowhere is seeing that big move, and keep in mind, it plays out expiry. So some part of this move that we're seeing could be expiry related as well. Quite a few stocks in the last few minutes have moved up. SBI, that's been the real kingpin out there. It's been moving very, very well, and it's giving you those indications that it has valuation support. Some of the smaller PSU banks, well, they outperformed, in the last 18 months or so. But now SBI has come to the party, and when SBI is moving, it gives you that feel-good feeling because that's the largest PSU banking name as well in there. Big up move is what you're seeing. Just one more point that I've been pointing out for the last few weeks. It appears that Reliance Industries is going to take the top position on the Nifty with regard to weightage. So if you pull up the Reliance Industries stock and you pull up HDFC Bank, earlier the difference between both of them in weightage terms was close to 400 basis points or 4%. Reliance Industries was less than 10% and you had HDFC Bank that was close to around 14%. But because of this year-to-date move that we've seen on both these two counters, it's Reliance Industries as well as HDFC Bank, not the intraday chart. You pull up the year-to-date chart. Because of that kind of a move, now that has narrowed down to around 60 basis points as we speak. The HDFC Bank's weightage has come down to sub 11%, while Reliance Industries is now commanding close to 10.4% weightage on on the index. I just want to point that out as well. Sometimes if the batsman is not in top form, send in someone else, let them lead the team for a bit, and maybe in fact they take the markets higher, and that appears to be taking to be the case as well. Well, let's find out how you trade the index. Shrikant Chavan joins us. Hi, Shrikant. Good afternoon. Good to see you win. Well, if you bought the dip, you would be very happy. But what do you do from here? The Nifty is up, holding at around 21,780, while the Nifty Bank is now up close to 400 points. Your view?
Yeah. Good afternoon, Nigel. Good afternoon, everyone. I think, the market was completely following to the overall global news flow. And after the unfold of the specific news flow, what we saw is that 21,500 acting as a major support for the market. And the best part is that the market has broken the most crucial resistance level of 21,600 without any major efforts. Bank Nifty, which was consistently trading below the levels of 45,700, 750, has also managed to surpass the same. So I think both these indices are helping the market to move higher to each other. Reliance Industries, which is into new heights, State Bank of India, and a few Adani Group companies. So I think the overall sentiment of the market is again back to the normal. Now again, the market will start following to the news flow from the domestic markets. And based on the overall technical formation of the market, I am of the view that the market is again heading for the levels of 22,000 in the near term. So in case if there is any correction, then again, it will be an opportunity to buy. But even at current levels, I think the rewards are favorable for bulls to create long positions.
And trades, Srikanth?
Yeah, I think at these levels, there are like few stocks which are really doing well. Reliance Industries, which was consistently holding below the levels of 2950, is now sustaining about the same, which is positive. I think based on its technical formation, the next level to watch out for would be 3000, 3050. So it's a buy at current levels with a stop loss at 2920. So Reliance is a buy at current levels. We also like few metal companies because today, after the numbers of NALCO, we are seeing some activity in Vedanta. Vedanta is consistently forming higher top, higher bottom based on technicals. I think the stock is heading for the next levels of maybe 290, 295. So it's a buy at current levels with a stop loss close to 270 on the downside. So Vedanta as well as Reliance looks really good at these levels. State Bank is already crossing all its important levels. But from here, if there are like any positions, then one should look for hold on to it because the next level to watch out for would be close to 800 rupees.
Sorry, 800 on SBI, right?
800 on SBI, yeah.
And you buy it on dips, so you can buy here.
Yeah, if there is a positional view, then even buy at current levels because the overall momentum and the way there is a volume and price expansion above the previous high of 725, I think the stock is heading for at least 800. So even at this level, it's a buy with a stop loss at 720.
All right, Srikanth, we'll leave it there. And we'll come back to you for more in just a bit from now. So that's State Bank of India. Well, stocks of oil marketing companies are in focus today. There's a note coming in from JP Morgan. They've raised the multiples that they're assigning to BP, HP and IOC, and consequently, of course, higher price targets as well. Sonal, tell us more.
Well, yes, they're quite bullish on the entire oil marketing space. They say that rise in crude prices in the month of January, and there was an increase of around $5.50 per barrel in February itself. That dented the rally. That is what we saw in stock prices earlier as well. However, they say crude is still at December quarter averages. Additionally, the fear that diesel or petrol prices would be cut, that hasn't happened, which has protected their marketing margins. And consensus EPS estimates for FY24 is still very low. So there is a possibility of an upside. So they say unless crude price moves higher and there is a cut or change in retail fuel prices, there is not much to talk about in terms of a fear around oil marketing companies. They say there will be a continued upward bias on oil marketing companies' stock prices. Against this backdrop, they've increased the target multiple for EV to EBITDA from 5 times to 6 times for all the stocks, and they continue to prefer BPCL followed by HPCL. So they've raised the target price on BPCL to 720, for HPCL to 520, and on IOC to 205. They maintain overweight on BPCL and IOCL.
Okay, all right, Sonal, thank you very much for that. So OMC is continuing to find more traction in the market. Let's bring in our guest on the show. Prakash Diwan is joining us on Closing Bell this afternoon. Good to have you on as always, Prakash. And what a run these oil marketing stocks have had, right? Once they were the untouchables because you didn't know what was happening with policy. Things have really changed. But the question is, how much more? I mean, do you buy into JP Morgan's thesis that there is still a case for a further re-rating higher?
Good afternoon, Surbi. So, while the IOCs and BPCLs of the world have moved dramatically in the last 4 months, one thing that continues to remain in their favor is the fact that they're still not over the top in terms of valuations. I mean, if you see the median PE bands in which they've traded, even the current ones would probably be very close to that and not, too off the mark in that sense. And interestingly, today's pre-open trade, about 70 lakh shares of BPCL getting absorbed is a significant quantity. And that tells you that there's enough appetite for safe haven investing in this volatile markets with businesses that generate cash, that are in a dividend paying position. And come March, we'll probably see a lot of that happen because the government would also need to kind of shore up its reserves. So, IOC declared that dividend of 4.5 some time back. There's probably some more to go. And that's what keeps the yield from what you're investing into also healthy. So I think the setup is such, the price hike that was expected was almost seeming imminent, hasn't happened, which means that they'll continue to. And the global setup that is now kind of very clearly visible is that the margin, the GRMs have also kind of, bottomed out of sorts, which we saw in the last quarter. So, all of that kind of gets in very well. And of course, you may not make 40-50% gains in 3 months the way you did the recent past, but at least outperformance of the overall market is definitely evident with most of the larger ones. I particularly like IOC. And if you were to stretch that hydrocarbon logic to other things than just oil marketing companies or refining businesses, it could look at Gas Authority of India as well. So there are select pockets where there still seems to be a shift from value to growth and not yet momentum.
Okay, all right. Got that in terms of OMCs. Well, let's talk about Mahindra & Mahindra. They just reported their numbers just an hour or so ago. Sonia joins us with the fine print of those numbers. Sonia?
Well, thanks a lot for that. The earnings were largely above street estimates. However, the tractor segment is something that continues to be under pressure. So if you look at the numbers, right, revenue growth of almost 17% is what the company has clocked in. The EBITDA has gone up about 15%, but the net profits are up 61%. But the problem really is on the margin side. So margins on a consolidated basis have fallen to 12.8% versus 13%. That's because the tractor segment has been under pressure. There's been no growth this time in the tractor segment. Year on year, the top line is absolutely flat. And on the margin front, the farm equipment margins are down 80 basis points year on year, coming in at 15.4% versus 16.2% same time last year. Even the auto segment, on a quarter-on-quarter basis, auto segment is seeing some pressure in margins. Margins have come in at 8.2% versus 9% sequentially. However, if you look at the market share across most segments, whether it's the SUV segment or even the farm equipment segment, the market share for the company has gone up. But some operational pressure definitely is being felt. And now with raw material costs moving up further in Q4, it would perhaps be hard for them to sustain these margins. Back to you.
Okay, all right. Sonia got that. So some volatility after the results on Mahindra & Mahindra. We do have to take a break on that note. We'll come back with more stock check, more comments and commentary. And we will also have Sanjay Parekh, founder and CIO at Soham Asset Managers, joining in.
Welcome back. You're tuned in to Closing Bell. You're on CNBC-TV18. Well, Prakash, I wanted to ask you about three stocks. All of them had a bit of aluminium in it. Nalco obviously has the entire play out there. On Nalco, we know the numbers are very, very good, Prakash. And, you know, the EBITDA number, 770 crores, much better than what the street was working with. On Hindalco, they delivered a shocker in terms of the capex. So what's your view on that post that 14% correction? And the last one is Vedanta, which my colleague Ashmit is going to fill us in with regard to what the Supreme Court had to say on the Tuticorin smelter. And then, Prakash, you could give us your view on all three of them. Which one is your preferred one? Ashmit, fill us in.
Well, as far as the copper smelter facility is concerned, this has been a long-standing issue. First in 2013 and then in 2018, there were issues that rose with respect to allegations of gas leakages. And subsequently, there was a state government-led action which led to the closure of the facility in 2018. That is what is being contested before the top court. Now, in the course of the arguments that took place from this morning, important takeaway is the Supreme Court proposing an expert committee to look at resuming of operations. What the Supreme Court has said is that it is proposing of an expert committee that will have three terms of reference. Number one is to look at the possibility of resumption of operations. Number two, in case operations are allowed, then what the necessary safeguards could be. And number three, potential reparations that Vedanta may need to pay in case of allegations of questions of environmental damage. That's as far as the expert committee is concerned. As to what this committee will look like, well, the Supreme Court has painted the broad contours, saying that this could possibly include NEERI. It could include the Tamil Nadu Pollution Control Board, the Central Pollution Control Board, expert committees, IIT representations. Essentially, Supreme Court is looking to make this a comprehensive committee that can assist the court in giving a look as to what resumption of operations, what that scenario will look like. Now, just for clarity, two aspects here. Number one, Tamil Nadu government is fiercely opposing this tooth and nail. Tamil Nadu government's view is quite clear that the opinion on the ground is that this plant is no longer tenable, viable, and is causing a risk to the locals. That's the Tamil Nadu government's position. Vedanta, on its part, however, has clarified that there is no evidence. There is no document that has been shown before the court which displays any form of gas leakages or that substantiates allegations of gas leakages. Now, let's keep in mind that this is a proposal that fell from the apex court. It has not yet been finalized. The hearing is still underway as we are speaking. So the issue is yet to take root. It is yet to be finalized by the apex court. But nonetheless, suggestions on resumption of operations falling from the apex court from the Chief Justice himself.
Okay, thanks a lot for that, Ashmit. What do you make of this news? Prakash, in terms of an SOTP, it hasn't had much to Vedanta, but the commentary is positive, and that's why that stock is moving up. And it seems Mr. Anil Agarwal is getting his house in order. They're talking about demerging the entities. Maybe the steel asset gets sold. He's got enough dividend that's coming in there. He's secured himself in the near term. Hindalco is another one, a shocker coming in from there. And Nalco, beautiful numbers, though valuation's not cheap. Your take?
No, absolutely. I think you summed it so brilliantly, Nigel. And I must first tell you that out of all the three, my pick continues to be Hindalco, in spite of the howler of a number. The number was not bad on a consolidated basis, but it's the capex that's been set aside or identified, which seems to be much larger than what the street was expecting. And, there is this whole feeling that if the company were to continue investing into Novelis and ramp up capacity and the, investment goes up to almost $1.5 billion. It's not something which, and for the next few years. So it's significant. There's not been much of deleveraging that's yet happened. So people will probably start getting worried. But what it's setting itself up for, Nigel, is a world-class capacity in terms of catering to a product, especially the alcans, which is coming in from China. And if the China-US relationship is anything to go by, I think the capacity in the Bay Area is going to be absolutely stunning in terms of what it can do after maybe a year and a half. So if you have the view for the long haul, I think there's no reason. And that's exactly why most brokerages have given out a rating which is still outperformed, but they've lowered price targets. So the price objectives might have come down below 600 for most of us, but I think the story continues to become even stronger. So that's something which was not anticipated, and that's why it's coming. I think at 500, 6, 510, wherever it is, it makes for a very good buy. Nalco has, of course, always had that sheen in terms of the asset that it sits on, the kind of potential divestment could kind of unlock value, but then it's run up quite a bit in anticipation of that. And these kind of numbers to be repeated might not be very easy for them. There is a challenge ahead of them. Vedanta, to be honest, don't really want to get into it just because of this light at the end of the tunnel, which could be temporary, which could probably be short-lived. Even if something were to happen, it might take some time for all of that to start translating into the P&L. But Hindalco to me is a great entry point. I know it's contrarian, but I like stories where results have disappointed in the short term, but the long-term story is intact.
Okay, and to be fair, actually, it wasn't even the results. The results were okay, as Nigel was telling us. It was just that this whole issue about the overruns on one of their big capex programs in the US.
Just one more point with what Prakash is saying, just to back that point up. For the initial capacity, they're going to be spending around $6,000 per ton, for us capacity. But in the subsequent 6,000 tons, of a similar capacity that they're setting up, they'll spend around a third of that. Means around $1,500 to $2,000 per ton. So initial capacity gets set up because it's greenfield at $6,500 per ton. The following capacity gets set up at $1,500 to $2,000 per ton. So that's another data point. So going with Prakash's take, he is saying that he's bullish on the stock, so just backing this up. InCred is one of those brokerages that says it's bad news, go and buy it. Let's see how it plays out.
Okay, all right, Prakash, on that note, we will let you go. Thank you so much for being with us this afternoon. Always great talking to you. And we'll catch up again soon. Let's focus on some more buzzing stocks. And Nuvama Wealth is something that really stands out after what has been a blowout quarter for them. Remember, Nuvama Wealth was the wealth management and capital markets business that sort of demerged from what was earlier Edelweiss, and then it got listed recently. We have Upasna joining in to give us some more color. The numbers looking quite good, and the market is loving it, Upasna.
Yes, Surbi, totally. Well, sequentially, the number looked very strong with a revenue growth of almost 14% for the second quarter in a row. And in terms of profit also, it's seen an uptick of almost 21% on quarter-on-quarter basis. Now, coming to the segments, capital market business clearly outshined with a growth of almost 36%, with the exceptional performance in line with the macros. Now, coming to the company's wealth management business, it stood flat at about 3% growth on quarter-on-quarter basis. And AMC business also saw an uptick of almost 13% on a quarter-on-quarter basis. Now, management has said that in the coming few quarters, it plans to launch offshore wealth propositions starting with Dubai and Singapore. And heading into 2024, management believes growth momentum will continue and fundamentals remain quite strong for the company, is what the company has said.
And Nuvama has been a big wealth creator in the wealth management business, but that itself has created a fair bit of wealth. And there are a few listed there in that space now, unlike even 5 years back where I don't think you had any listed wealth management players, but you've got standalone entities now in that space. Well, the market's up 90 points and we've been sort of fixated on SBI, and rightly so. But I think what we'll do is we'll just take a look at what HDFC Bank is doing as well. I think HDFC Bank now is at the day's highest point, and in the last, I think, 10 minutes or so of trade, last 10, 15 minutes of trade, is a sharp move higher that we have going on. But I think Mahindra & Mahindra reported numbers, and I think we should be able to cut across to Anish Shah, Group Chief Executive Officer and Managing Director at the press conference which is underway.
To reduce the waiting period, and also any more headwinds that you see for the passenger vehicle segment overall?
The target for waiting period will be about what I've said right now. So I don't think anything is going to change in the next 2 months on the waiting period on the products that I played out right now. The outlook on next year, I had it on my slide. So basically, SIAM projection right now for the industry is 10% for UVs, 3 to 4% for passenger vehicles, and we are giving a kind of directional input. I wouldn't call it guidance, but a directional input that we would expect to continue gain market share and would be in the mid to high teens.
Good afternoon, gentlemen. Tushar from ITA Profit. Few questions. First, about the tractor business. Given the rural picture that we have, how's the Oja brand of tractors performing? And given the rural economy situation, maybe you're seeing some green shoots. So, how is is there an increased adoption of the small tractors, and what is the sales mix like? Secondly, if you can,
if you don't mind, can we just do one at a time? Sure. So let's just take the Oja one. So basically, I'm adding OJA and Target because these Target was the equivalent product from Swaraj, launched a little earlier than OJA. So if you basically take a market share comparison in two periods, April to August and September to January, which is really in a way pre-launch and post-launch, in the less than 30 horsepower segment, which is where both these brands play, our market share has gone up from 46% to 53%. So they're doing well.
Okay, well, we'll sort of go back to Mahindra & Mahindra, but just a sort of quick slice of the conversation, the question-answer session which is underway there. Sanjay Parekh is with us, founder and Chief Investment Officer at Soham Asset Managers. Sanjay, great to have you with us here as always on CNBC-TV18. Thank you for your time. I'll get to some of the themes that you like and you own, but I just want to start by asking you about banking for a quick bit, and specifically SBI, which is the biggest bank in the largest in the PSU space, and HDFC Bank, the largest in the private sector space. Now, complete divergence, right? What's going on?
Yes.
We know the factors. There's still a lot of valuation sort of difference, etc. But for HDFC Bank, do you think around these levels perhaps could be the right time to start accumulating if you have time on your side? A banker I was talking to made an interesting point, and I don't know if you'd want to reflect on that. He said, and by the way, we had his point was credit costs cannot stay this low. We had Amitabh Chaudhary of Axis Bank yesterday on the record telling us that how it can't go any lower. It has to rise, right? It's cyclical. These things are cyclical. It has to rise. And this banker I was talking to, he was making the point that when that happens, that is when people will start to see the quality of HDFC Bank's book and their sort of risk practices and underwriting skills, etc. And that will shine through. So just wanted your thoughts there. HDFC Bank, Sanjay.
No, Prashant, absolutely right. So one is, we look at Bank Nifty as a whole, and we do a bottom-up valuation. And, for a aggregate Bank Nifty, if you take an ROE of 16%, it's available at now 1.9 times on FY25 and 1.6 times on 1.55 times on FY26. So based on very reasonable valuation that we give, let's say for SBI at 1.3, 1.35, HDFC Bank even at 2.4, ICICI at 2.5, and so on, you still get almost 25% upside over 15 months because it's FY26. So one is clearly, I think the last 12 months has been underperformance, but the next 12 to 15 months, we think will be positive. On HDFC Bank, I completely agree to the respected banker. That what is today exemplified is the liability side of, the deposit growth is not commensurate to the credit growth. And hence, some part of the asset side book will have to be reduced. And, and then it could be 1 or 2 quarters of transition. And that would mean a little less growth. And then it is back to square one. But, as you know, the NIMs and the efficiency would actually get better because some of the low yielding book will get shielded down. So I think it's quite a lot overdone. There's significant underperformance now. But at least, in my career, I have not seen HDFC Bank at 1.8 times now for 25 and 1.6 times 26 for at least 16% ROE that they'll do next 3 years. So I think it's quite overdone, and I think it's a matter of time. It will be a transition of 1 or 2 quarters. Once the liability side also gets better, I think it will be a good compounding story.
Sanjay, I just wanted to come in now because we're talking about HDFC Bank. I was just looking at, some part of your portfolio where the other banks, in comparison to their weightage on the index actually is relatively higher. I think IndusInd Bank, J&K Bank, ICICI Bank, out there you have a larger weight in your portfolio in comparison to what it enjoys in the benchmark. So incremental money that you have to allocate now, would you now start allocating to HDFC Bank because relatively actually you're underweight in comparison to the benchmark?
No, Nigel. Yes, we are underweight and it has helped us, and we have big overweight on SBI. As you know, we have 7% in SBI, which it took time for it to reflect, but it's always non-linear. You saw almost a 9 months consolidation for SBI, and within 2 weeks it gets a catch-up. And that's exactly what I think even can happen to the banking sector, where you could have a 1 year underperformance and then just 1 month and it'll just catch up. And it does happen. So yes, you're right. We are overweight on SBI, ICICI, Axis Bank, IndusInd Bank, and underweight on HDFC Bank. But I really feel from here on, it makes sense to increase the weight on HDFC Bank. Whether we will do, it's just a little bit of our internal positioning, but I still recommend that this is a good time for patient investors to invest with a little longer term time frame. And this is even, it could reflect even in 1 year. You don't have to wait for 2-3 years is what I think for HDFC Bank.
Okay. Sanjay, hi, good afternoon. Just looking at all the PSUs, which are obviously getting really confusing now. And the moves are interesting. Actually, IRCTC, which had great numbers, the better numbers, that stock hasn't reacted that much. It hasn't even run up as much as the others. But a lot of the other names, look at SJVN. SJVN had a weak performance in the third quarter. Stock was slammed for 1 day. Then it started recovering again. And then you have the others, of course, the likes of Hudco, etc. What is the approach you're taking to, and then the railway stocks, forgot to mention them. They're running, back to their winning ways as well. What is the approach you're taking? What do you have in the portfolio right now if you do? PSUs, X of PSU banks? And what is the advice?
We own HPCL and BPCL, which has worked very well for us. Both are up 70, and one of them is up 100% after dividend yield, and BPCL is up 75%. And you've got a dividend yield at your cost of almost 5 to 6%. So it's worked very fabulously for us. And here I think on both of them, the core earnings, at not the advantageous gains that we have this year. This year, both could do 110 to 130 rupees earnings. And that is not sustainable very clearly because last year they had a loss. So the government did allow them to make profits in the first half. And we think that sustainably earnings of 60 to 80 rupees, because it's very volatile. So you can't have an exact pointed figure on both the stocks. But broadly, a figure on sustainable numbers of 60 to 80 rupees earnings is possible for HPBP. And the transition they are going through, where they're investing into infrastructure, the new energy space, battery, ethanol, gas, the whole distribution chain, and refining and marketing as well. So I think the transition is less appreciated. And I think over 2-3 years, there clearly are still room to grow in terms of the EBITDA and profit. The key is obviously after the election, there should be some clarity around the regulatory framework, which is important. So that's the way we are thinking about HPBP, and we are holding both of them. Having said that, they've run up quite too fast, and I still recommend to be careful now because significantly run up. So it could consolidate for a while. On the other defense stocks, I think there's a lot of euphoria in certain pockets. One has to be very careful. And I think the retail euphoria is quite large there. And that is playing up where, one of the railway finance companies, what was not even at 1 time, is moved to 4 times, while HDFC Bank is at 1.6 times. So there is element of euphoria in railway stocks and defense stocks, certain pockets, and one has to be selective and careful.
Sanjay, just one name. I don't know if I think we have discussed it once sometime back. Or is this? I'm not sure if this is a recent addition. Fusion Microfinance. I'm just looking through the portfolio for stuff which has not done well. So there is some room. What is plaguing it, and what will cause it to do well? I mean, from a stock perspective.
Yeah, no. So as you know, they had an exposure. So they're quite good and sustainable on basis. They used to do an ROA of 4.5%, and the leverage was around 5. So 21-22% was the ROE, and growing at more like 20% plus. But this quarter they had an exposure to Punjab, wherein certain institutions there have tried to sway in certain districts that you don't have to pay and you give us 100 rupees. And we will see that, you have a Karja Maaf and all that stuff. So that led to some element of collection issues. But the overall collection still was very impressive. And that is one area where they'll have to handle it well. And they've guided for a higher credit cost. and hence, the stock is consolidating. Very clearly, the situation in terms of overall collection efficiency has to get better, and the situation in Punjab in certain pockets have to get better before the stock further goes up. So I think it will consolidate for a while and wait for the next line of in terms of collection efficiency and asset quality.
Okay. All right. Sanjay, thank you very much. Good to have you on the show as always. Appreciate you taking out the time. Thanks for being with us. Well, with that, it is time to move on to our segment D Street Chatter. We've got Nimesh joining in with all the buzz from dealing rooms. So quite a recovery today. Nimesh, what did you pick up?
Oh, in fact, it's a very sharp recovery and came as a bit of a surprise as well, Surabhi. Clearly, nobody in the street was expecting such a sharp pullback after such a weak global cues. So clearly, there is a bit of a surprise element as well. But again, it's the PSUs, such a sharp pullback, just 2 days of sell-off, and we've seen a bit of a very sharp pullback in many of the stocks now. So OMCs are doing good today, PSU bank stocks are doing good, but at least these two sectors are where there is a bit of institutional interest as well. I wouldn't say it's for the overall PSU sector, but at least these two sectors are well bid by large institutions. From an overall flow perspective, it's still been a mixed day, not much in terms of large buying, so to speak. So this buying looks like it's more of short covering than not genuine buying flows from the larger institutions. The tech is under pressure on the back of the weak global queue. So that's one space which is on the negative side today. Having said that, for the last couple of days, we've been just trading in this very narrow range of 200 points on the Nifty. 21,650 is acting as a very strong support, and 21,850 is where you'll see a bit of resistance as well. So you have to play in this 200 points range. But the surprise element today was a pullback rally, and that too led by the PSU stocks.
All right, and some of the stocks just bursting away. I think you have SJVN that's been down considerably, flying away as you speak, NHPC as well. But Nimesh, what all have you picked up? And I think Vedanta, which we were talking about, makes it to the list as well. So run us through it.
Yes, so I'll talk about Vedanta, but the first stock on my list today is Aurobindo Pharma. The stock was down after the USFDA action, but it has recovered as well sharply from the day's low. And I understand, some clutch of domestic investors or buyers in today's weakness. So there is a bit of support now coming in at these levels. And the overall feedback is, on the call itself, the management had said that they've shut this unit. So, to some extent, this news was priced in by the market participants. So that's the first name. The second name is Swan Energy. I've been highlighting Swan for many times in the past as well. There were a lot of blocks which has crossed hands in the last 3-4 months. Now I understand there's going to be a very large fundraising soon in Swan Energy. So that is something to track going forward. The third name is Macrotech Developers. Within the real estate name, this is the only stock which stands out today on back of very strong buy flows. So expect high delivery volumes in Macrotech today. And the last one is Vedanta. You spoke about it. You've seen a big move on the back of that surprise, Supreme Court kind of judgment on, not a judgment, but an indication of on the smelter plant. But watch out for a very large block deal. That's been long pending. Looks like it's going to come very soon. So that's something a lot of buy side have been alerting that maybe a block will come very soon in Vedanta.
All right. Thanks a lot for that, Nimesh. Well, it's not over till it's over. Pull up the Nifty Bank. In a matter of minutes, it's lost close to around 400 points. I think in the last 7 to 8 minutes, the Nifty Bank has seen a sharp downtick. I think I don't know whether we can pull up a candle. That'll give you a better picture. And pull up ICICI Bank. That's one of the banks in there that suddenly took a leg down. You have Kotak Mahindra Bank as well. So it's all happening today. Quite a volatile final 30-35 minutes we're bracing ourselves for. And as we speak, the Nifty Bank that had moved to around that 46,100 odd mark, suddenly a sharp decline is what we saw. So the bulls and the bears, both of them having their share on this Valentine's Day, so to call it.
The Nifty Bank, Nigel, is up 270 points. Yes. And now, because the gains have shrunk, SBI is basically 80% of it. 220 Bank Nifty index points out of the 270 are just SBI, because others have dropped off, as you said. I mean, ICICI has dropped off sharply. Axis has dropped off sharply. And let me just look at HDFC Bank as well. Has that also... I think
still
that
down
is
about
also,
1% or so.
Yeah, that has also given up gains, actually.
Yeah.
The high was, 1391 or so at 3 o'clock. And it's dropped off about 10-12 bucks from there. So that's the action in the Nifty Bank. We'll take a quick break here. We are back. Buy today, sell tomorrow trade. Short-term trading ideas coming through with our technical experts. And there's, of course, 15 minutes to go for market close.
individual stocks doing a thing of their own. We're just talking about SJVN. Now the stock is up close to around 14%. And a big volume spike is what we're seeing out there. IRDA, just around 15 minutes or so ago, there was a large trade that took place. I think 1% or changed hands. So that stock moved from around 160 to around 170. And the last few days, it's been continuous lower circuits. From 215, it came down to 160. Someone's decided, I want to pick up a good chunk, and that's got cleaned out. And that's why the stock has bounced up in trade. So big up move is what we're seeing out there. And maybe, in fact, we could pull up Yes Bank as well. That one is, again, moving a little bit higher. Last few days, it corrected from around 33 rupees to around that 28 rupee odd mark. Today, it's seeing a bit of an up move. But Shrikant Chavan is back with us. Shrikant, just highlighting some stocks that are moving around, but I believe that you have some buy or sell calls. So please fill us in.
Yeah, Nigel, I think there are a number of stocks which are really doing well. And after correcting to the important levels, the way there is volume and price expansion, I think they are going to get a number of stocks which can do really well in next 4-5 days of time. But in that list, I would like to go with those stocks which are expanding their overall price range. And in that, we like Container Corporation, which is currently trading around 940, 942. If we see the overall entire pattern, then it is forming higher top, higher bottom, and it is crossing its important resistance level. So based on its technical formation, I think the stock is heading for at least 1,000, 1,025 in the near term. It's a buy at current levels with a stop loss close to 920. So Container Corporation, Concur, is a buy at current levels. We also like Tata Communication, and there also we feel that the stock is heading for at least 1830, 1850. Currently, it is around 1740, 1755 levels. So it's a buy at around current levels with a stop loss close to 720.
Okay. All right. Shrikant, thank you very much for those trading calls. We do have to take a very quick break. We'll come back with the final leg of trading action in just a bit. Welcome back. Well, we're in the last leg of trade. Mayuresh Joshi, Head of Equity Research at William O'Neill, is with us. Mayuresh, thank you for joining in. So let me just ask you, fag end of the earnings season, we've got a lot of mixed numbers coming in. And I'll talk about some of the industrial companies. We had Bosch yesterday. The numbers looked good, but the guidance was lower. Ditto for Bharat Forge. So just tell us, fag end of the earnings season, anything that stood out for you, and a specific comment on some of these industrial stocks.
Afternoon, Surabhi. No, so I think the numbers delivery for a lot of these stocks did take a beating. And again, the commentary thereof was not very encouraging. So the commentary from Bharat Forge in terms of muted demand going forward as well, that did not augur well with the street. And therefore, I think the kind of reactions on top of soft numbers that you probably saw. On the other hand, the heavy capital goods companies, the companies to the likes of Siemens, Cummins, did exceedingly well, and the entire expectation in terms of more orders coming, albeit with a lag of 3 months, because as we enter into the election phase, the kind of orders that will flow through post-elections can still continue at a good pace in terms of the capex mode that the government is on. And therefore, I think numbers of all these heavy capex-oriented industries did exceptionally well. So I think two sides of the spectrum. One is expected to continue doing well with better order flows, better execution, and better margins.
Absolutely. By the way, do you, Mayuresh, afternoon, do you track a stock called WPIL, which is a pump company, water pump company? Do you have any coverage or review?
No, afternoon, Prashant, no.
Okay. I mean, it's been sort of on a lower circuit for the last many days. I think about 6 circuits straight down every day. This is after numbers, and today I think it's seen a bit of a reversal come through. So just thought I'll check up on that.
I think on this one, Prashant, around I think 6 years or so ago, 5-6 years, we are on CNBC-TV18 explained the company. If I'm not mistaken, it was 1/5 the price.
Yeah.
And these numbers that came out a few sessions ago were very disappointing. Yeah. And that's the reason why the stock corrected. But today, it's seen some bit of a relief. But otherwise, day to day, it's been at lower circuit. Yeah. Though it's up 5-6 times, I think, in the last 5-6 years.
No, absolutely. And, it's a fantastic, it's been a fantastic story. I mean, look
they
at the last 10
realigned their
year
business.
Profit growth, sort of return ratios, etc. It's done exceedingly well. Mayuresh, for now, we'll say thank you, but don't go anywhere because we're going to come back in a bit from now for more questions with you. Let me just quickly wrap up things here on the market. You got what? I mean, 100 plus points on the Nifty is on the screen. The Nifty Bank, I think, is also going to end up about 0.9%. That's about 400 points. So there was a bit of a sort of up and down. I mean, a sharp surge on the Nifty Bank, sell-off starting at about 245 or so. The low was made at about 315, and from there we've moved back up. So it's not a bad close actually on the Nifty Bank, like it was looking it will be even 10 minutes ago. So that recovery coming through. Let me take a quick look at what happened as far as the stocks, etc. go. So it's PSUs once again. BPCL, State Bank of India, ONGC, Coal India are the top Nifty gainers, all public sector names. And outside of it, there were names like Tata Steel and Maruti, which did quite well. On the losers list on the Nifty, there was Tech Mahindra, Cipla and Sun Pharma, which lost a little bit. And of course, in the broader market, it's PSUs back again with a bang, right? So SJVN, sharp gain, Nalco, very sharp gain, Hudco, there was Oil India, BEML, MRPL, Chennai Petro, and I could go on with more names here in the PSU space which participated, and how, with volumes, by the way. This is the part of the market which looked up the most. The singular loss, once again, is Paytm. I mean, if you want to see what pulled back, I think it ends at the lower circuit once again. And I was just looking at the price pattern for Paytm, the chart basically, and for the day that, I mean, actually the day before close for Paytm, when the RBI circular came, was 761. It's from that level, it's basically halved. And of course, 761 was a far cry from where actually it made it to the market when it listed. And from the RBI circular day, it's essentially halved. So, it's just been an extremely damaging kind of period for Paytm shareholders in terms of value erosion, as we've seen. A few other pullbacks coming through in names like MTAR, where I think there was a sharp cut. Info Edge that was down as well today, one of the top losers, and a few other IT names like LTTS, which looked down as well. So all in all, I mean, I think, not a bad session at all, given the fact that the market in the morning looked like it's going to be slam dunk down. It was slam dunk down, and then there was a pullback and a recovery, a full recovery, so as to speak, and then some for the Nifty and the Nifty Bank and the broader markets as well. So 21,850 is where we leave things off this Wednesday afternoon. Well, it's a wrap on this edition of Closing Bell from all of us here. It's goodbye. Thanks very much for staying with us. But Markets Forward will come on and pick up on all the action in just a bit.